Are you interested in generating income with your cash? Well, I got 3 new stocks to wheel with different risk and reward levels. First off, remember, I am not a financial advisor. I just play one on TV, and please do your own research and invest at your own risk. If you'd like to get future ideas of more stocks to trade, then smash the like button and please subscribe to the channel. Today, I'm going to be talking about 3 stocks I've added to my arsenal of wheel stocks for 2021. The idea behind milk money is putting your money to work to make more money, and one of my favorite ways to do that is to run the wheel to generate income. I will have more in-depth videos on this strategy and how it works, so subscribe to learn more. But briefly stated, it's selling puts on stocks you want to buy, and when you finally get put those stocks, you sell covered calls. So all the while, you are utilizing your cash to generate income into your account. What I really like about this strategy is you can dial in your own level of risk to reward. So I'm going to be talking about 3 different stocks at 3 different levels of risk and why I like them, as well as how much income you can expect to earn from each one. So let's get into it. The first stock on my list is on the lower risk end of the scale. In general, the safest way to sell options is to pick stocks you would like to own, and I like to have a segment of my portfolio in safe dividend stocks. Selling puts on dividend stocks kind of lets you get the dividend now, even before owning the company. Anyway, Altria is a longtime favorite dividend player, and its current dividend is at 8%. Now, some might look at Mo as a bad safe stock to choose because they have had some trouble the last few years, but personally, I think that has set them up to be a great value play. They took on some bad debt and went through a period of negative earnings, and you can see their stock has been in a steady downtrend for a few years now. So why the heck do I have them as my safe play? 1, selling puts is a great way to buy bottoms because you give yourself some margin of error, and I do think Mo could be bottoming out. As looking at the charts, you see it has broken out and retested its downtrend and is currently holding above it. Analysts expect them to return to profitability this year with an earnings growth estimate of around 11%. Also, Morningstar gives an estimate of their fair value currently at $54, so I believe we have some room to run to the upside. I like to enter my positions by selling puts, so let's look at what kind of return we can get through selling puts on Altria. I try to shoot for a 30 delta, but sometimes if I'm anxious to buy a stock, I will sell closer to the money to try to get put sooner with a higher premium. So let's look at 2 options here. If I stick to the 30 delta put with a strike price of $40.50, I can get about $80 of premium, which would be a 2% return or 16% annualized. Not bad. If I wanted to be more aggressive, I could choose the $42 strike and get about $1.30 for a 3% return. Eventually, you'd get put Mo as it dips, but then you'd be holding a nice defensive dividend payer with some upside. This is going to be one of my core plays over the next few months until I build a buy and hold position in Altria. The next company on my list is an easy one to wheel for most people because it's only a $20 stock and has pretty decent premiums. However, I have it as my medium risk play because of the uncertainty of the profitability going forward. In the short term, I do think there's some safety, so I decided to take the risk. Some people are in love with Rocket, thinking that it should be valued as a tech company that will steal all the mortgage market share by having a great user experience and speed. I think this gives the potential in the short term to have some pops in price, which would allow you to take your put profits early, while others are recognizing that Rocket Mortgage is part of the mortgage industry, and that's a tricky one to predict. And they see Rocket as having challenges increasing earnings over the next few years, with some analysts actually predicting a decline in earnings per share. This is why I decided against buying and holding a few hundred shares. However, in the short term, I feel safe getting put the stock if need be. For instance, Morningstar analysts estimate that their fair value of Rocket Mortgage is $21.55, which is a few cents above its current price of $21.25. And looking at the chart, you can see there's a very strong floor support at around $20. So I feel like selling puts at this level is relatively safe, even with the uncertainty. But that uncertainty adds to the premiums collected. If Rocket goes on a run, I might feel less confident selling puts on it afterwards, however. But in the meantime, let's see what you can make with Rocket. If you were to sell a $19.50 strike put, you would get a huge $1.40 in premium, which is a 7% return, making the risk worth it for me. Especially because if it did get put to me, the call side returns are nice as well, and it's a stock at a fair price, so it would be hard to get hurt too much. Now, this last stock has some meme qualities, which makes it very lucrative for options, but it also adds to the risk, so this is my high-risk play. This stock, Palantir, is a Reddit favorite. If I'm going to play a high-risk stock, it has to be one that I have some belief in, instead of just buying anything that's a meme. If you dig into the fundamentals, you might be concerned because Palantir is not yet profitable, and really, it's a business that's hard to understand. However, I'm betting on the horses in Peter Thiel and Alex Karp, and it seems like a lot of big companies are also believing in them as well, as news of new contracts seem to be coming out weekly, including just recently a deal with IBM. I own some shares for the long haul already, and I am wheeling more to generate income while also adding a cushion to the risk of owning these shares. If we dig into the option chain, you can see that there's great premium in this stock currently. As of yesterday, you could sell a 32 strike put for $390 or a 12% return. Pretty good, and I'm willing to have a little more risk to wheel this company for that kind of return. But you need to decide what your risk tolerance is and what percentage of your portfolio you would want for each strategy and risk level. Personally, the longer the bull market runs, the larger percentage of the lower risk companies I will be using. But in the short term, while I feel extra bullish, I feel pretty good about having a few higher premium stocks. Let me know what strategies you'll be using in the comments, or if you have other favorites you'd like me to talk about. And definitely smash that like button and subscribe to make sure you get all my future videos on stocks I'm investing in and options trades I am making. Again, I'm Joshua. Thanks so much for watching Milk Money, where we learn how to make our money, make more money. So we'll see you in the next video. Peace.